Hello and welcome to our training today. My name is David Miles and I am a coach and a principal with Academy of Trading and Investing, LLC. We are a group of coaches with decades of experience each. We are three senior coaches. We probably have 100 plus years experience between us, but we've been trading for many, many years. And we wanted to bring trading to an individual and get that individual to be successful. There's so many attempts to be successful that just don't work out. I'm of the opinion that you really can't develop a trading strategy without a coach. So we offer that trading. Here is our website address. Check us out. We've got information on there that can be very helpful. And and good luck in your trading. Today we want to talk about 3 moving averages that every trader needs. Here's a chart of American Express. I have 3 moving averages superimposed on the chart here. Now, I don't recommend you go out and use this as an exclusive trading strategy. This is an addition to your trading strategy that can shed a lot of light on what you're trying to accomplish. This is one of the key ingredients of my trading strategy. Excuse me. And let me show you how these work here. 3 moving averages. Number 1, let's start with the 21-day moving average. Simple. And that's the red line that is superimposed on the chart. One characteristic of the 21-day moving average is that when candlesticks are above it, it tends to act as support, as it did right here, or right here, or right here. And when the candlesticks are below it, it tends to act as resistance, like they did here, here, and here. So, support when the candlesticks are above it, resistance when the candlesticks are below it. If I'm about to put on a trade, I want to make sure the share prices, if I want to buy a call, for example, I want to make sure share prices are heading up and they go above the 21-day moving average. I don't want to take it here so it hits support and falls back down. So number 1, that's how I use it in my particular trading. If I'm going to buy puts, I want it to break the 21-day moving average, making sure it's not going to act as support before I will buy puts. Excuse me. The other 2 moving averages, the blue line here is an 8-day exponential moving average, and the green line is a 4-day exponential moving average. The 21-day is simple. The 4-day and the 8-day are exponential. I have technical indicators that tell me when the market the current trend is likely to end. And I want a buy or a sell signal. I call it a secondary buy or sell signal, which is produced by these 2 shorter moving averages. A buy signal is produced when the green line breaks above the 8-day. Green line, the 4-day, breaks above the 8-day. This tells us that this may be a good time to take a trade. Again, I use other indicators that would back that up, including candlesticks and things. But that would have been a good time to take a trade. So I want these 2 indicators, exponential moving averages, to back up my trading. Now a sell signal to be on the opposite side. When the 4-day breaks below the 8-day, that's a sell signal. Here it tells us the market is likely to move down. We had an anomaly here. The 21-day did act as support, but we had prices jump up and then come right back down. But this right here, along with our technical indicators, if they flash together, then market is likely to move down. Here's a buy signal. 4-day breaks above the 8-day, and look what ensues there. So when the short-term averages crosses the longer-term average, it is either a buy signal or a sell signal. Now another buy or sell signal occurs right here. Now when the 4-day moves down, doesn't cross through the 8-day, but hits it and bounces up again, that is a buy signal. The green line goes down, but it will go back up when it hits the 8-day. If that happens, that's another buy signal. Good time to take a trade would be right there as it moves to new highs. Well, let's look at this right here. Here's the 4-day. It comes down and begins to move back toward the 8-day, and then it fails. That's a sell signal. So we wait to make new lows. We have a support line right here, and a great time to buy puts is right there. Sometimes it's tough to join a trend in progress because you're either wait too long and you buy it right at the end, or and also in something like this, you don't want to be in a position to try to catch a falling knife. You could get hurt, or try to catch a falling piano. You could get hurt. But if you rely on these type indicators, that's a great way to join a trend in progress. Here's another one. The 4-day comes down, touches the 8-day. We have a candlestick that forms support on the 21-day moving average. Then it begins to move up, and great time to buy calls as it moves to new highs. Lots of ways to use these moving averages. Those are the buy and the sell signals. Now, the 8-day will often act as resistance, much like the 21-day, if candlesticks are below it. It did it there, and it did it. Well, let's look at the other side. This acts as support. If you have candlesticks following the 7-day or the 4-day moving average, for example, here and here, you have a strong trend. So if you're in a trade, you've made some money. Again, I like to take half profits when my indicators and other things flash and say, okay, I'm taking half profits, and then I'm playing with the market's money. Then I may put a stop below the 8-day moving average, or I may take all my profits. Here would be a good time if I took all my profits here would be a good time to re-enter that trade. Hits the 8-day, bounces up, the 4-day, and we're in that trade. Put our stop right here, and we would have been out with half our profits here. When the market starts to hesitate, build consolidation, I usually take half my profits. And then I'm going to use the 8-day and the 7-day to determine how long I stay in the trade. Now, again, I don't recommend that you use these as a standalone trading system, but add them to what you're doing, and it should be very, very helpful to you. What I like about technical analysis is it takes my emotion out of it. It'll take yours out too. Where's this trend going? Uh-oh. I'm thinking, oh, we're in trouble. Oh, we're in trouble. Oh, no, maybe not. No, But this will tell us when to get in, when to get out. And that's what we need as traders, to take the emotion out of it and get good, reliable indicators that show us what we need to do. I wish you the very best in your trading. Again, check out our website. I think it's, again, virtually almost impossible to come up with a creative, profitable strategy that will work in all markets up and down. So think about coaching and check out our website, and I wish you guys the best, and we will talk to you soon.